capital allowances. So as per the Taxation Act, the treatment for capital allowances has already been given. So these, they need to be what? They become under allowable because they do aid for us to generate more money. Then we go for premiums. Premiums paid or premium. So under them, they're saying the tax deductible amount of the premium paid for the right to use or occupy a land or building, plant or machinery, trademark, and the likes. What it means there is a good example. Let's take, we are not owing this, we are not owning this premise, right? Right? And in the course of making use of this, we need to be paying that rate. You find that we are paying that money so that we make use of what? These premises. And in the long run, we are able to get what? We're able to get the money through the school fees that you have, right? So they are saying, what would be the taxable? What would be the tax deductible there? So they have given, say, under premium paid, they're saying the amount of premium or consideration divided by the number of years for which the right of occupation or use is granted, or where the period for which the right of occupation is granted exceed 25 years. The deductible is one what? 25th of the premium consideration. So you look at the time upon which, hello, let's follow. Do you understand that point? You're not. Okay. Those who are reading from the notes that I provided, I said, if you look there, they are saying the tax deductible amount of premium paid for the right of use or occupation of land or building, plant, machinery, patent, design, copyright, or any other property of any similar nature is Jegudi. You should be able to understand how much rent you are paying in each year, because there, what they have done is, if you are paying at once, you should be able to know how long you are going to use that building or place. Then you divide the amount. It's like you are trying to apportion that amount over the period in which you are using, right? Or else they are saying where the period for which the right of occupation or use is granted exceeds 25 years. That is, if using that premise, let's take we are renting this place for more than 25 years. They're saying the deduction is 1/25th of the premium or consideration. So you take that ratio of what you have paid. If the right to use this place exceeds what? 25 years. I think I pick an example, money example, right? For easy understanding. They have given an example there, right? I know you're not getting it. They're saying a retailer paid 2.5 million for the right to use building, for the right to use what? A building as a rented shop for 30 years, right? This is exceeding what? 25 years as given in the principle there, right? How much is the retailer allowed to deduct from the assessable income when computing taxable income? They have given there, right? They are saying the premium paid is paid over the lower of, so you look at, it will be, there is 30 years or what, 25 years. So they say, therefore, the premium allowable for deduction in each year of assessment up to 25 years will be 2.5 divided by what? Divided by 25, which is 100,000. So we are saying tikandi mamount awiri. Igakala mamount awiri let's take Timona period. If the period is less than 25, we just have to divide the total amount given by 25. But if it's exceeding, we need to take 1/25 of the amount. Whichever is below the other is the one that we have to take. Kizungu. You have understood now? Eh? So those we cannot alter. All what you need to do is just understand what the principle says. What have you understood? You can't manage to explain, but you have understood. Okay, you choose between Mugabira Pamamba, where they're saying premium is paid. They have given two things there, right? A and B. They, if you understand those statements, if you are to learn whichever of the two gives you the lower value, is the one that you go for. You're there, right? So the one on the example that gives us the lower value is by just dividing the 2.5 by what? 25 years. Duty every year. The amount that we have to deduct is 100,000. Margaret, have you understood? Yes, Chinula. I was looking for Gertrude. Yes, a Gertrude. Don't worry. Ena mambo sega zili zozi. Ologoza da basi tuweruka segaso. All right, then we go for bad dates. If you look at bad dates, um, they're saying bad dates proved, dates proved bad to the satisfaction of the Commissioner General during the year of assessment are included in either current or previous year of assessment are allowable for deductions. What does that mean? If we look at if the sole proprietorship business has told you to say these amounts are our bad dates, those amounts they need to be taken off from the profit that has been earned, right? Only if it has been approved by who? The Commissioner General. You remember last time I told you about uh, the law of the Commissioner General, right? When tunakuza exemption and the likes. When tunaona zinazosegesa ntaya maeso. Mumba, what did you write? Aha. You there, right? Okay. From there, we look at what? Doubtful dates. What are doubtful dates from accounting knowledge? Doubtful dates. So doubtful dates, the ngongole mene somebody is having to you as a business, right? Of which you are not sure whether you collect it or not. And it is the doubtful date that becomes what? A bad date. What was that accounting? So they are saying they are allowable only if there are specific provisions. General provisions are not allowed. So that is, you need to provide some specifications how these they have to become what? Allowable. Allowable. They would if fail. I know you're not getting it. They would all these allowable deductions they need to be taken off from what? Assessable income. Yes, the other way we would use that. Mozambique, the opposite taxation when we allow data, it becomes confusing. But it's not confusing. You're the one who is confused. All right? All right, let's proceed. We go for export allowance there. If you look at export allowance, they have given specification there. So they're saying exporters including those manufacturing in Bonn are entitled to claim additional tax allowances for the export of non-traditional goods as follows. So they have given some specifications. So that's just a general rule. But quickly, for the things that we are likely to meet in our exams would be like repairs, pension not necessary. Research expenditures. What would be research expenditure? What is it that we are to associate this with? Sorry? No, we are in this case we are looking at let's take uh, you are building on a new product, right? So you need to understand people. What are the things that probably they would feel the product should have, right? So you do careful. That's the research we're talking about here, right? So if you see them, they're saying revenue expenditure pertaining to research and experimental work of taxpayer in the field relating to his trade are allowable. You find if we are spending money so that we understand what are the things, all the components, all the ingredients that our product should have, those they will be contributing to the amount that will be able to enter the product once it's ready, right? So they have contributed towards the amount that we are up to. They become allowable or deductible. In simpler terms, for you to know should this be allowable or not allowable, you should be able to figure out is it contributing to the amount earned. If it does, it becomes allowable. If it does not, it becomes what? No, no, allowable, deductible. There is school, school don't do that. Allowable, deductible. We are talking of what? One thing, right? Ngati chinthu chimene expense imene tikukambirana sikupanga contribute sikubweresa ndalama, ndekuti is what? Not allowable. You're not supposed to deduct that, right? But if it is helping to generate that income, it becomes what? Allowable. It becomes what? Deductible. That's what we mean. Ndemwilalo muntu ngati inuyo adapanga online. Thanks, Kira, you have understood what I mean, right? Yes, yes. Kirwani, awuzisa kupesa. No, chimene matanthauza ichi kuti pali anthu ene akupanga online study, right? Koma nawo sali mgulu losamvetsetsa ngati ifeyo, right? Ndiyamvetsetsa bwanji. All right. All right, are we there? Because I would like kuti tithane ndi mawu enawa so that are we there? So ndiye kuti chilichonse if it is contributing towards the generation of the income, then it becomes allowable. Then again we talk of donations. So in this case, when we talk of donations, we look to the donation, has it been given to an approved organization, right? So if it is to an approved organization, the only allowable deduction is what? 250 kwacha. That is as paid to the tax, right? During the donation, they would only 250 becomes what? Allowable. You're there, right? So here they're saying the allowable provided, they're saying allowable provided it is not less than 250. Then you also have given donations to not at what? Not what's that English? The English is confusing, right? Donations to not. How do you read that? All right. In short, yeah. Again, it's like here you're giving donations to those organizations that are not profitable, right? That are not into profit making in other ways, right? Let's say a donation to Chipani. Chipani is an organization, right? Is it a profit making organization? No. So they're saying allowable if like conditions, right? The donation are at least 500. Did you carry 500 and above? That's what it means, right? Also, they're saying social welfare, if it's a social, if it's to help for the well-being of the members of that organization, then it also becomes what? Allowable. Civic improvement, allowable. Those are all only looking at what? The well-being of the people associated. Educational development also becomes allowable. Similar purpose as approved by the minister, that is according to what would be given. Social contribution, if you are also making social contribution, they're saying here there is allowed a deduction of 50% of the amount paid as a social contribution directly into the building of the public hospital, schools, and the like. When we talk of social contribution, we are looking at works that are there to benefit people within the community, right? Should there be drilling of the borehole, construction of schools and the likes? Now, if you as a sole trader, you have contributed money towards that. Let's take if you have contributed 70,000, how much becomes allowable? 35, right? Half of that, 50%. Are we there? There are also annuity payment. Annuity payment, we talk of installment payments. Again, you should also be thinking, say, these annuities that we are paying, are they contributing to the generation of money in the company or not? I've already talked about that guideline. There are so many, but I wanted us ndikabwera ndikufuna tizangopita straight for solving. All right. So as I said, tikama panga determining the taxable income, our effort will be to really adjust the income that has been reported by the sole trader in the income statement. So I'm giving you an assignment. Revise the income statement as you did with the previous classes. So from there, we'll be able to see how best we do that. So you write our heading as we meet. You write determination of taxable profit. Determination of taxable profit when an income statement is available. When an income statement is available. Are we there? Statement is available. So here, what we'll be focusing on is, we'll try to focus as a business, how much have they earned? Understanding how much they have earned, it is throughout the income statement. Then I'll teach you what adjustment we need to do. So you find that there are some items in the income statement, we'll deduct them from the profit or we'll add them back. A good example, depreciation, right? What is depreciation? Sorry? Of asset, right? When you bring it into the income statement, how do you treat it? You deduct, right? So you deduct depreciation from money. But is depreciation money? It's not money, right? If you look how much, what is the amount that we need to charge tax? The depreciation from what? From the profit. Because it does not really take money out of that. Do you get it? I find it. You understand depreciation? Okay. Mwagulisa katundu the cash 10 kwacha, right? Then you reduce profitability by taking off 2 kwachas depreciation, right? But depreciation is just an administrative charge. That does not really take money from the business, but you're taking it from money. So you need to bring it back because you have not taken money out of the business. And then what are the things that have been deducted, but we also need to add back? What are the things that we took off or we added, but they are not supposed to be added? We need to take them off. So those are the things that we'll be learning. Let's agree on one thing. How long should be our presentations? I need detailed ones. So group 3, the fact that your date is 25, you should not, group 3. But group 3, you should be at-risk lady. Why I'm saying so? Should I find one of the first 2 groups, what they are presenting, it seems Udi Sana was again will cancel that presentation. And that shall mean you'll be graded halfway. So if you are given a second chance, you have already lost what? 5% from 10. So make some committees. See you. Yes. Yes, you are the one calling. What did you do, Jan? Have you added our max? No, I said Ntikumane. Ndivange hadi ujini. Mandi. PC yazimu. Yes, leo nimemfuna ndivange hadi after class. The PC has gone. Yes. You left